Hey, what's going on YouTube? Welcome back to Tech Conversations. Firstly, if you haven't already, make sure to check out the Discord. I'll put a link to it in the description below. Also, make sure to check out Webull. Right now, you could get 20 fractional shares when you deposit at least $500 by using my link in the description below. Remember, each share is valued between $3,000 and $3,000. So go ahead and check out Webull. I'll put a link to them in the description below. Now let's get right into today's video. So today I want to talk about another rare strategy that could potentially be very useful. This strategy will allow us to make money both ways, and you really want to use this strategy on a stock that you expect to be very volatile and make a large move either up or down. So remember, before you ever enter any options trade, please make sure that you know how to close it. I will pin a video in the comment section below where I show you guys how to close out of any options trade. So let's get right into this video. So for today's video, I'm going to be using this stock, SoFi Technologies, ticker symbol SOFI, to show you guys an example of how to set up this strategy and how it works. Remember, this is just an example I'm showing you here, so don't copy this exact same trade. So what we first want to do here is we want to go into the options here for SoFi. So here we are in the options for this stock. And of course, the first thing we do here is we would select an appropriate expiration date here. Now, of course, the expiration date that you select really depends on your situation, but a couple things to keep in mind. The large move should happen before the expiration date, and also keep in mind the further out you go in expiration, the more expensive this strategy will be. But I'm just going to leave the expiration date as it is, July 19th. Let's say I expect this stock to have a very large move before that date. So now the next thing I want to do here, so I want to make sure that I am on buy, and I want to make sure that I am on calls here first. So we're first going to buy a call here. Now, the call that we buy here needs to be an in-the-money call. So remember, when it comes to calls, the in-the-money call options are going to be the options whose strike price are below the current share price. So current share price is $7.34. So the options that have a strike price less than that are the in-the-money options. They're also going to be more expensive than these other options, which are out of the money. So the first thing we want to do here is we want to buy an in-the-money call. So I'm just going to do this very first one right here, the one at the $7 strike. So I'm going to go ahead and select this here. So this is an in-the-money call option here. That's the first thing we're doing here. Now the next step, we still want to stay on buy here, but now we want to switch to puts here. So now we want to buy an in-the-money put option. So for put options, the in-the-money put options are going to be the one whose strike price is greater than the current share price. So again, current share price is around $7.35. So these options up here that have a higher strike price than that, these are in the money put options. And again, these are going to be more expensive than these other options down here. These are out of the money put options. So now we want to buy an in the money put. So I'm going to buy the in the money put that's at the $8 strike for this example here. So I'm going to go ahead and click on this here. And so we're going to be entering this for a debit, but keep in mind, what we pay is not necessarily our max loss, right? For this example, we would be paying somewhere around $100 to enter this, but that's not our max loss. Our max loss, as you can see, is actually going to be a lot lower here. And as you can already see, we're going to be able to make money both ways here, up or down. So this strategy is very similar to the strangle, the long strangle option strategy. But this particular strategy is called the long guts option strategy. So let's head on over to OptionStrat and let's visually take a look at what this strategy looks like, what our profit or loss might be depending on what the share price is, what the date is, what implied volatility is, all of those things. So let's head on over to OptionStrat. So I'll put a link to OptionStrat in the description below. This is a very great way to visualize your options trade. I highly recommend using this before you ever enter any options trade. And again, I'll put a link to it in the description below. So I'm going to go to build here, and we're just going to start off with long call, just like we did with my example here. So again, the way you use this here is you first select the stock you're interested in. Again, for today's example, we use SoFi. So I'll type in the ticker symbol, and here it is. So I'll click on it. Then again, the next thing we want to do here is we want to select the expiration date. So again, here it shows you all the available expiration dates for this stock. Again, for today's example, I just chose July 19th. So I'm going to leave that as it is there. I'm going to click on July 19th and leave that there. And so now we can actually start adding the options here. So again, the first thing I mentioned was we wanted to buy an in-the-money call option, right? And which one did we select? We selected the one at the $7 strike. So right now we're on the 750 strike. So I just click on this, slide it down. Now we're on the call option of the $7 strike. This is an in-the-money call option here. And so remember, calls are bullish strategies. They allow us to make money to the upside. But now I said we also want to buy an in-the-money put option here. So all we need to do is go to add here. And then we can add we can buy another call, sell another call, buy another put, sell another put. But again, you want to buy an in-the-money put here. So I'm going to click on buy put. And then again, we said we want an in-the-money put option. For today's example, I selected the one at the $8 strike. So again, I'm going to click on this, drag it up until I find the one at the $8 strike. So we have a call option at the $7 strike, put option at the $8 strike. As you can see, OptionStrat recognizes this as a long guts option strategy. If you want to learn more about it, you can hover here and it'll tell you some more information about it. And so as you can see, right, for this particular example, the debit that we pay would be $107. But again, keep in mind, that's not necessarily our max loss. Our max loss for this example would be $7. And so let's take a look here at the graph here so we can expand and kind of zoom out more. So again, a max loss 7, infinite profit to the upside, infinite, right? We can make an unlimited amount to the upside. To the downside, it's also near unlimited profit. You're going to continue to make money as long as, the stock doesn't go to zero. And so we can also see the break evens here if we want. And then again, let's take a look here at the chart down here. So again, we can make money both ways. And again, we can see what our profit or loss might potentially be depending on our share price and depending on the date here. So let's say tomorrow, Tuesday, SoFi makes a large move, which again, for this strategy, you want the stock to make a large move. Doesn't really matter which way. Let's say it makes a 16% move to the upside tomorrow. According to OptionStrat here, I should be up around $51. And so remember, we can close out of that, out of this strategy at that point. We don't have to wait until the expiration date. Again, same way same with the downside. If it makes a move 16% down tomorrow, according to OptionStrat, we can make around $73 or so. So again, this is a really great way to visually look at your trade before you actually place it. Now, remember, we should always take a look at what happens with changes in implied volatility. So we do have this slider down here on the bottom right where we can take a look and see what happens when IV goes down or IV goes up. Now, since we are buying two options here, and since when you buy an option, you want IV to go up, here we would also want IV to go up. So if IV were to go up, notice you're going to start to see more green here. Right? You can see more green now. If IV goes down, you'll see less green. Right? And so for this particular strategy, we'd also want IV to go up after we buy into this guts option strategy here. So as you can see, this could be potentially very useful again when you expect a stock to make a large move up or down. So anyways, if you have any questions, feel free to leave them in the comment section below. Check out the Discord, link to that in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.